He understands the waves of things moving up and down. And who is it? He's on the line. It's Bob Prechter. He's a famous guy, president of Elliott Wave International. I've been playing around with the waves and the sub-minuet waves for years. And, of course, he's the author of that book, Conquer the Crash. Welcome, Robert Prechter.
Nice to be with you, Rick. You're a famous guy, too.
Well, I'll tell you what, we're going to have a couple of charts, and why don't you give us your call? I believe we have S&P and gold, and I'd be interested to see where we are in the wave counts.
Oh, man, there's so many things to talk about. You know, this year is going to go down in history with two really interesting junctures. First one was the first quarter when we had only 2% of traders bullish. Now we've got over 90% bullish. At the same time, we have a very low put-call ratio. We've got more than twice as many advisors bullish as bears. So the whole scene is completely changed. And this is in the middle of a situation where during these 8 months of rally, you've had a real contraction in momentum. You've had a decline in the advanced decline ratios that have been going up. You've had a decline in volume as the market's been going up. So you've got a combination of extremely bullish players along with a waning upside momentum. It's the exact opposite of what we had at the March low. So
you know why I started reading your books, though? The fundamentals sometimes are too long and they give me a headache. Let's look at the Dow chart and you put your magic on it so we can see.
All right. Well, one interesting thing about the current juncture is that the market, or the Dow at least, has retraced 50%, 52 if you're counting precisely on an intraday basis, of the decline. This is the same amount that it retraced into April 1930 after the 1929 crash. And the 17th of this month, November, and today are the 2 days where it's 50% in terms of time, depending on whether you measure intraday peaks or closing highs. So I think we've got a great juncture of price and time right here that indicate at least a neat place for the market to top out.
Well, viewers, before I get to Joe, if you want to do your homework, read about how time and price sometimes square out. Not only Mr. Prechter, but there's a guy called W.D. Gann. Get the books, Google him. Joe, what do you think?
Hey, Bob, real quick, if you look at 2009 in terms of price action, technically, it looks a lot like 2003. What you're talking about going forward, what year would you be using as the template to suggest that this potentially is the top coming in the market?
Well, there are no good templates because this wave structure is the largest that we've lived through. I think on a smaller basis, you can look at something like 1937-38, where you had a very powerful partial retracement of a previous very, very strong drop. But this time around, it's a much bigger situation. And back in March, we had an upside target, S&P 1,000 to 1,100. We've gotten to this area, in fact, slightly above it, and we're getting all the bells ringing on the negative side. So it's a bear market rally, not like 03 when things went to a new high.
So, Robert, I happen to agree with you. So where does the S&P go then in the next wave lower?
I think we're in for a very large decline in 2010. I think it's going to be at least as big as what we saw in 08. So I really recommend that people get as safe as they possibly can with their money. This is not a good time to be invested. People were talking earlier on your show about some stocks that didn't have very good valuation.
Well, Mr. Prechter, if we're going to have a double dip, there's one commodity that comes to mind that I think you'll have an opinion on as well. Do you think it's time to buy more gold if you're looking for that W pattern?
Well, I'm very, very bullish on something that almost everyone hates these days, and that's the U.S. dollar. We can talk about that. And the flip side are the commodities that have been going up in response to the falling dollar for the last 8 months. And what I've got here is the flip side. We've got 97% of traders bullish in the gold market, 95% in the silver market. We've only got 3 to 8% bulls down on the dollar. Now, to me, this is a setup. It doesn't necessarily give you the exact day of the turn, but it tells you the environment. It's the exact opposite of what we had in March, again, when the commodities were bottoming and the dollar was topping.
Well, once again, it seems like it's back all about the dollar. Mr. Prechter, it's been an absolute pleasure having you, and I hope you come back very shortly. Well, gang, let's talk about it. I happen to agree with his formation on the S&Ps. I do think there's some risk here, but hey, you got to keep running with it while this baby's got some horsepower left.
It certainly looks like there's a feeling like the crowded trade with the dollar right now, and everybody seems to hate it. So, you know, it makes sense why Bob right now is looking at that as the next area where you can see the explosive move to the upside.
Well, more fast money, but up next, we're going to have some